Welcome to Dinar Community, your reliable source for authenticated updates on Iraq's evolving financial landscape. Today marks a truly historic turning point, one that will not only reshape Iraq's internal economy but also ripple across the global currency system. For over a decade, talks about the possible revaluation of the Iraqi dinar have echoed in investment circles, financial policy debates, and community conversations. Often dismissed as mere conjecture or wishful thinking, those discussions have now crossed into confirmed reality. In a landmark move, the Central Bank of Iraq (CBI) has officially announced the commencement of the dinar revaluation, set to go into effect on June 20, 2025. This isn't a speculative report or leaked memo, it's a ratified, irreversible policy, issued as part of Iraq's broader economic reform strategy. Currency revaluations of this scale are rare in modern finance. Iraq's announcement has already begun to reverberate through major financial institutions, currency trading desks, sovereign investment entities, and global think tanks. For longtime dinar holders and believers in Iraq's recovery, this is not just an event, it's a once-in-a-generation financial inflection point. A strategic tiered exchange framework. When the new valuation goes live, 3 structured exchange rates will take effect. 300 Iraqi dinars per USD for government procurement, designed to support critical infrastructure, defense, and national development projects. 310 Iraqi dinars per USD is the interbank rate, governing high-volume institutional and digital transfers. 320 Iraqi dinars per USD for retail public access, giving everyday Iraqis a consistent, transparent conversion rate through licensed institutions. These tiers are carefully calibrated to maintain economic equilibrium, balancing state needs with market dynamics while avoiding disruptive inflationary consequences. Unlike abrupt currency pegs or forced parity models, Iraq's revaluation is measured and methodical, representing both pragmatic economic stewardship and global financial alignment. Global response and institutional realignments. Even ahead of the implementation, multinational banks, logistics firms, importers, and regional trade networks are already recalibrating their operations. Procurement managers are adjusting price forecasts, oil exporters are reassessing shipping costs, and institutional investors are reevaluating exposure to Iraq's markets. Financial capitals like Dubai, London, and Singapore are actively updating risk models and economic outlooks based on this pivotal policy change. What once were speculative discussions have now turned into actionable strategic planning sessions in boardrooms and investment committees across the world. Domestic readiness and national coordination. The Iraqi government has spent months quietly building an infrastructure for this launch. From enhanced security deployments to robust public information campaigns, the revaluation rollout is being executed with military-level precision. Television, radio, and social media networks are broadcasting educational content about the new exchange system. Financial literacy initiatives are reaching citizens in schools, mosques, and local community centers. Citizens are being urged to avoid black market dealings and instead rely on official banking channels for currency exchange. This national awareness effort is aimed at protecting consumers, building trust, and preventing opportunistic exploitation during the early adjustment phase. Strategic backing from IMF and World Bank. The Iraqi government has worked closely with the International Monetary Fund (IMF) and the World Bank, not only for expert consultation but to solidify global credibility. Their involvement assures international partners and investors that this is a serious and globally aligned reform, not a temporary or reactionary move. Technical assistance has helped Iraq build systems for inflation control, monetary liquidity, and foreign reserve management, ensuring the revaluation is backed by robust economic fundamentals. Economic impacts on Iraqi citizens. For ordinary Iraqis, the most immediate benefit will be a noticeable boost in purchasing power. Imported goods, cars, electronics, food, and clothing will become more affordable. However, this improvement may be accompanied by short-term confusion, misinformation, or price adjustments. To combat this, the government is emphasizing smart financial behavior, urging citizens to budget wisely, avoid speculation, use authorized exchange platforms, build savings for long-term security. This isn't just a currency change, it's a financial awakening that empowers Iraqi citizens to better manage personal wealth in a modernized, digitized economy. A restoration of financial sovereignty. This revaluation is about more than money, it's about national identity. The Iraqi dinar, once battered by war, sanctions, and economic collapse, is now being restored as a symbol of strength and dignity. In years past, the dinar's devaluation represented national hardship. Today, the revaluation represents a bold new future, reinforcing Iraq's place as a resource-rich, globally integrated economy. Lessons learned, global best practices applied. Iraq's policymakers have studied the revaluation experiences of other nations. Vietnam for controlled stabilization, Zimbabwe for cautionary tales of hyperinflation, post-war Germany for disciplined economic revival. Using these models, Iraq has crafted a strategic, long-term blueprint centered on reserve growth, policy transparency, and structural reform. Sectoral impact and future investment. As the currency stabilizes, investment opportunities across agriculture, infrastructure, tourism, and technology are expected to flourish. Iraq's farmland is ripe for agricultural investment to reduce food dependency. Infrastructure projects will draw international engineering and construction firms. Digital transformation is opening the door for fintech, education startups, and online commerce. A stronger, stable dinar removes a key barrier for global investors who have historically been wary of Iraq due to political risk and currency volatility. The road ahead, metrics and vigilance. Iraq's leadership understands that the success of this revaluation will be judged by real-world data. GDP growth in non-oil sectors, inflation stability, foreign capital inflows, job creation across diversified industries, ongoing policy adaptability. These indicators will prove whether Iraq's transformation is sustainable or merely temporary. Conclusion. The countdown ends, the new era begins. With the revaluation set to activate, Iraq enters a decisive new era. What was once a theoretical debate is now an official state policy backed by global institutions and domestic readiness. The journey ahead will not be simple. It demands public patience, leadership clarity, cross-institutional collaboration, national unity. But if managed wisely, this revaluation could unlock unprecedented prosperity, elevate Iraq's global standing, and rewrite its economic destiny. Stay tuned to Dinar Community for continued coverage, strategic guidance, and in-depth reporting as this historic transformation unfolds. If this report brought you clarity and value, give it a like, share it with fellow dinar holders, and subscribe for our ongoing revaluation series, where we'll dive deeper into sectoral impacts, investor strategies, and step-by-step exchange procedures. This is not the end. It's the beginning of Iraq's financial renaissance, and we're honored to be on this journey with you. Like and subscribe for more videos.